Have you ever wondered why Japan has the most debt of any country relative to its GDP? Well, right now, governments across the world are doing the exact same thing in Japan to get the #1 spot, and the consequences could be disastrous. In the 1980s, Japan was the envy of the world. People thought it would overtake the US as a global superpower. But in 1989, to reduce inflation, the Japanese government raised interest rates. And while raising interest rates can be painful, it's usually not that big of a deal. Here's where it went wrong though. When the economy started to fall, instead of letting it work out like they should have done, the Bank of Japan did an about-face and tried to stimulate the economy by printing money, which only led to more debt and higher inflation. This would be the start of a multi-decade period of stagflation in Japan, in which you have low economic growth, high inflation, and high unemployment. To this day, 40 years later, the Japanese stock market is still below its 1989 peak. And today, in 2022, governments are starting to make the exact same mistake. For example, with California's $1,000 inflation relief checks, and Germany's $200 billion to offset energy costs. And the UK has gone the furthest and is now printing money to pay its debts. They're all taking out debt, pumping money into weakening economies, experiencing double-digit inflation.